if you've got your phone alerts on, Ethereum, or ETH as we call it, is exploding right now. On November 18th, 2025, ETH just smashed past $3,000, up over 8% in the last week alone. But here's the real kicker. Trading volume has gone nuclear. We're talking $49 billion in 24-hour buys on November 14th. That's more action than a Black Friday sale at Walmart, folks. Today, we're breaking down explosive buying volume for Ethereum. What's driving the surge? No fluff, just the facts in plain English. Stick around, because if you're holding ETH or thinking about jumping in, this could be your edge. Hit that like button if you're bullish on America leading the crypto charge, and subscribe for more. Let's dive in. First off, what do we mean by explosive buying volume? Simple. It's when way more people are snapping up ETH than dumping it. Right now, daily trading volume is hovering at $38 to $49 billion, a 30% jump week over week. That's billions pouring in from buyers, pushing the price from a shaky $2,571 low to today's $3,000 high. Why does this matter to us Americans? High volume means real demand, not just speculators. It's like seeing packed stadiums at a World Series game. The energy's electric, and it's signaling a rally. Analysts at places like Sentiment are calling it a whale accumulation zone, where big players are loading up 1.64 million ETH. That's $6.4 billion worth, even as prices dipped earlier this month. Driver number 1. Ethereum's tech upgrades are firing on all cylinders, and they're making the network a beast for everyday use. Just this year, the Pectra upgrade in May slashed transaction fees and let us pay gas in other tokens. No more ETH-only headaches. Now, the big one's coming. Fusaka upgrade, locked in for December 3rd, 2025. This bad boy boosts data capacity 8-fold, from 6 to 48 blobs per block, cranking up transactions per second and cutting layer 2 costs by up to 95%. That's huge for DeFi apps, stablecoin trades, and even tokenized real estate we're seeing pop up. Picture this. Cheaper fees mean more Americans using ETH for quick payments or yield farming without getting nickel and dimed. Result? More on-chain action, which juices volume. Transaction counts are nearing 1.9 million a day, the highest since early 2024. Developers are flocking too, over 16,000 new ones in 2025 alone. It's like upgrading from dial-up to fiber. Everyone's logging on. Moving to driver 2. Institutions and us everyday investors are piling in like it's the next tech boom. Driver 2. Wall Street's finally waking up to ETH's potential, and it's pouring cash into our markets. Spot ETH ETFs? They're holding $19.15 billion in assets, with $2.85 billion fresh inflows just last month. That's BlackRock, Fidelity, and big banks betting on Ethereum like they did with Bitcoin. Whales, those mega holders with 1,000 to 100,000 ETH, added over 1.6 million coins in October alone, despite a price dip. Companies are even stocking ETH in their treasuries, just like MicroStrategy did with BTC. Add in a pro-crypto vibe from the Trump admin in 2025, friendlier regs mean less SEC drama, and you've got a recipe for surge. For us, it means easier access through your 401 or Robinhood app. No more offshore headaches. This is American innovation at work. Last but not least, the macro magic that's got everyone optimistic. Driver 3. The Fed's rate cuts are like rocket fuel for risk assets, and ETH is loving it. That October 2025 cut, the first in ages, sparked a 2.2% weekly jump, even after a tiny pullback. Lower rates mean cheaper borrowing, so more folks are dipping into DeFi for 4 to 6% yields on stablecoins, all on Ethereum. Stablecoin volumes hit $19.4 billion year-to-date, with ETH hosting 51% of that supply. Tokenization's exploding too. Think real-world assets like US Treasuries going on-chain via Ethereum. Layer 2s like Optimism are institutionalizing fast, driving settlement back to mainnet ETH. Historically, November's ETH's golden month, averaging 6.93% gains, with a 47% blast in 2024. Coincidence? Nah, it's seasonal buying plus these catalysts. So what's next? Predictions are juicy. CoinDCX sees $3,850 to $3,900 by late November. Tom Lee from Fundstrat, $5,500 to $12,000 by year-end. More bullish takes hit $6,925 or even $7,500 if ETFs keep flowing. Short-term, watch $3,900 support, hold that, and we're eyeing $4,000 resistance. But hey, crypto's volatile, a Bitcoin dip could drag us down 10%. Always DYOR and never bet the farm. There you have it, explosive volume driven by upgrades, Wall Street cash, and smart money plays. Ethereum's not just surviving, it's thriving in the American dream of innovation. What do you think? $5,000 by Christmas? Drop your predictions in the comments below.